Check it out, check it, check it out, check it, check it, check it out, check it.
Hey, Greg and the CE, call me hip hop junkie. Straight to your dome piece like Brass Monkey. All I wanna know, do you wanna get funky? CNC beats be kick.
Yo, 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 show host with the most, KD Take the Free, Coach K, whatever you want to call me. I'm back with another episode of the Wealthy and Healthy Podcast. Today is Wealth Wednesday, so you know we're going to chop it up as usual. We usually bring people on so we can give y'all the most value. And today I got a special guest, and we're going to talk about something that a lot of people think is saturated, a lot of people don't know about, a lot of people think that this industry is not what it really is, and it's really a way to help people build wealth. So that's why we are talking about life insurance today, y'all. So I got a special guest. His name is Tank the Guardian. If you guys have seen him, hey man, he's been doing his thing. Life insurance, a father, a provider, a connector. He has been doing his thing out here in Colorado Springs. He's originally from Phoenix. And I just met this gentleman a couple months ago or weeks ago, right? We chopped it up, right? And we had a good time at an event. And that's the power of networking, because a week or two later, I got him on the podcast, right? So I want everybody to start highlighting and comment below, what was your favorite connection that you've had this month? Actually, the first of this month. So what was your last connection last month that you had that was, the biggest, something big, right? And we're doing big things on the Wealthy and Healthy Podcast. And today, I'm going to let my guy introduce himself, but we got to Take the Guardian. He does insurance. But please tell the people where you're from, what you got going on in 2026.
What's up, what's up, what's up? My name is Tank the Guardian. I am your local life insurance broker here in Colorado, but I'm licensed in quite a few other places as well. I'm a father, full-time, work doing homeschooling events, have performers on my end, so I have student athletes, and I am, like you said, the provider at home, building a business, and working with everybody that I can to make sure everybody's protected and using life insurance while they're living.
Yeah, I like that you said while you're living, right? And we're going to dive right in, man. We're going to dive right in and say, so while you're living, you want to have some type of insurance, some type of cushion, right? So let us know, why you need life insurance while you're living, because a lot of people don't think that life insurance is for when you're alive. They think it's for when people die. So let us know what that is.
So life insurance is a tool, just like credit, just like being able to do like real estate and things like that. It is a tool for wealth. Life insurance can be used quite a few different ways while you are living. So of course, if you are injured, there are plans that happen to pay out when you are injured and make sure that your family is taken care of. Of course, if there was an illness, a diagnosis, most people after 6 months, if they get a diagnosis of cancer, they can no longer work at that facility anymore, because that job only pays out for that 6 months. But with a plan, a policy set for that plan, for that event, you would be able to get it to pay out during life. So there's many different ways to use life insurance, as well as generational wealth, utilizing life insurance plans in your business and your trust. Like I said, it's a tool, and we need to learn to use it as one.
Yeah, I think in our community especially, insurance is not as a priority as it is in other communities. Like it's business insurance, life insurance, health insurance. We don't necessarily look at that. A lot of people maybe on Medicaid still, you know what I'm saying? So the big thing that I want to talk about is the myths when it comes to life insurance, right? A lot of people, I've got into life insurance, y'all, when I was I think I was 21 or something like that. And I went through everything. I went through the getting licensed, but when I went to go get licensed to take my test, I failed. I was off by 2 points to be able to pass. And me, I was I'm just trying to add everything to my arsenal at that point. When you're young, you're just trying to figure out what's working. And I never actually got into the selling life insurance, but I know a lot about life insurance, so it really changed my perspective on how to protect my family and protect my wealth. But let me ask you this, Tate, what do you think, okay, so I've been doing my research, right? And I've been seeing that a lot of people think that life insurance is too much, right? That's the biggest myth that I've seen. Life insurance, they gonna drain your bank account for some insurance. And that's really true with other insurances. But if you look at life insurance, I think that is one of the most affordable insurances to even have in your life. So why do you think people think life insurance is so expensive? And what are your plans on breaking that myth?
most people don't understand the value of what life insurance can do for them. Yes, there are policies that can be expensive, but a policy that's built for you, you'll see the value in,
Yeah.
right? So, for instance, your light, your house, right? Most people get a mortgage protection on their homes to make sure that if something happens, be it a flood or anything like that, they're protected.
Right.
You'll get insurance on your vehicle to replace your car or whatever goes wrong on your vehicle. You'll get insurance on your phone to replace that cracked screen, or if something happens to that iPhone, because God forbid that $1,000 phone, we don't want to lose it or break it, right?
Right. Yeah. I think
Well,
that's big. That's big. Yeah.
that's the myth we have to break, is that the material things are more valuable than your breath,
Mm. A lot
because
of
it's
people
not.
don't hear that. Yeah, say that again. One more time. Say
Exactly.
it again.
A lot of times people believe that the material things are more valuable than their breath. And that's the thing that people don't realize when you die, or when you lose your job because you're injured or you're diagnosed with something, um, the car goes,
Yeah.
the house will go, the bills are still coming in,
Right.
but
Mm.
your breath, the value in you is what doesn't go. The value in what you could have been teaching is what doesn't go, right? And
Right.
that's what we're trying to protect with life insurance, is that value in your breath.
Mm. And when you talk about the value of your breath, I think that a big thing when it comes to life insurance in general and whole, a lot of people think that I'm young, I don't need it right now. You get life insurance when you're 50 or 60 and you're, looking to, retire. But I think that, us young folks got to start looking at, I'm only 23, so I think us young folks got to start looking at life insurance. Why do you think, people under, a certain age, probably like 30 even, they're like, I don't need it right now. Why is that?
Because most of us are uncomfortable with talking about death.
Mm, right.
We've been taught who to love, how to love, but we have never been taught how to grieve, or even given the space to grieve, right? And because of that, we're not planning for what happens after I die. Because I die, I'm gone. The next day, people still have to live. Businesses keep going,
Yeah.
right? And your family is your first business.
Mm,
And that's where we have to be reminded that, hey, everybody in our lives, down to the baby. If the
yeah.
baby is the baby's 18 days old, there is a plan to plan for the future of that baby and for generations to come, making sure that they have generational wealth. And like you said, being younger, yeah, you may think, oh well, 50 years old from now. No, well, no, 50 years from now is not when we're waiting for, because things happen. You get sick. There's more ailments when you're getting older, and people are expecting you to die sooner versus planning for the future when you're younger, and they're willing to leverage that smaller dollar amount for the bigger
Mm,
payout when you're younger. So yes, there, like you said earlier, there's policies that can cost $300, $500 a month, but most times that's because we waited so long. We have to stop waiting.
right.
We're playing the catch-up game,
Mm,
and we shouldn't be playing the catch-up game. Now is the time to be doing what other people have been doing and planning for the future. And
right.
like I said, it's just a tool. It's a tool that goes along with many tools.
Yep.
So this is one thing that I say. Like for me, I'm building a homeschool, and life insurance is a big thing, but it's also, we have to get a trust. Why? Because once this money pays out, we don't want our kids just to blow the money. We
Yeah.
want generational wealth.
Hmm.
It's time to start talking about trust, and that's where these things come into play.
Yeah, for sure. I wanna touch on trust real quick too, but let me ask you this, because here's another big myth that I've been seeing, right? When you get life insurance through your employer, and a lot
Mhm.
of people think that that's what you need, right? Like when I was like dibbling and dabbling in the life insurance area, I see so many people like, yeah, I got it through my employer, I got a 401k. Is that recommended, or do you think like someone should like, stray away from that, or, go to something else?
So I will never tell you to stray away from it. That is a start. I am proud of you if you gotten that through your job, right? Because that is a start. But if for whatever reason in this economy you are fired from your job, you lose your job, whatever way happens, that policy is then canceled because it is a term policy that's dependent on you having that job,
Mm,
right?
right. So
Um,
what's the my bad, let me stop you real
yeah.
quick. Tell us what a term policy is, because a lot of people don't know what that is.
So a term policy is a policy that is set up to pay for a certain amount of time. So say it's a 10, 20, or 30-year policy. These type
Okay.
of policies are good policies. You shouldn't just have one type of policy.
Yeah.
But a term policy is a policy most times where people um, believe they'll be dying within that 10, 20, 30 years to get that paid out, right?
Right.
And it does not grow a cash value. So it
Mm,
is a set amount of time that it's there for, and you would have to renew it after that time period,
okay.
right?
Okay.
And that
Yeah.
and the price on that could change.
Okay. Okay. So how does the life insurance policy build cash value?
So when we talk about life insurance policies that build cash value, we're looking at our IULs, our annuities, our whole life insurance policies. These policies take a percentage of what you pay on your premium monthly, and they put it into the market. And instead of, I know a lot of people hear Forex, right? We're trading stocks and things like that.
Mhm.
A lot of us don't have game on that. And when we do try to get game on that, we're too intimidated by all the different terms and terminology, things like that, right? So when it comes to the life insurance policy, it is a safe way. So it is a way to leverage your money. So the premium that you have, you are leveraging it with the carrier, who then promises you, hey, since you're paying this premium every month, we are going to give you a designated death benefit, but we are also going to take a part of that premium and we're going to put it into the market for you. And if that market wins, you win with it. If
Yeah.
that market loses, you don't get hit.
Mm,
And that is how it compounds money to set up for the future and build that generational wealth and that cash value that you could then use. And I personally have a policy for my kids because God forbid something happened to me. I have a mixed family, right?
mm,
So I have a mixed family. God forbid something happened to me, whether anybody else is doing whatever it is that they're supposed to be doing, I want to make sure my kids are still stable. So that life insurance policy says, okay, well, if something happens to you, they'll be paid out, or who you designate to take care of them will be paid out to then make sure that their home is taken care of. They have a stable house. They have, and whatever money they don't use, it could be utilized whatever way they choose. But
mm,
it's a tax that payout is tax free at that point. And
mm.
again, this is why I say your breath is important, right? You go out into your community. This is for anybody. If you go out into your community and speak, but you don't have kids, guess what? Your community is your village. Your community was listening to what you were talking about. They still need you, and if they don't need your 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 voice, they need whatever you were trying to build still. So let's keep that funded. And this is how
Mm,
we do it, because even businesses can then take out key employer policies on their key employer and pay out that way. So
right.
there's plenty of ways to use life insurance policies. Again, it's about how you want to use it. What do we want to do? What are we trying to build? Where are we trying to go for the future?
That actually answered my next question too, because a lot of people are like, what type of life insurance do I need, right? And like you
Mhm.
just said, you're like, it depends on what you want to do. If you want to build wealth and you got money coming in, you want to invest. I like that when you can go into insurance that, like you said, you can put your money into a cash value policy, and you can put that money aside for your family. And you don't take a hit. Like you said, you don't take a hit whether the market crashes or whether, whatever that looks like. And I think that, it happens when you find the right life insurance, right? Someone who's
Absolutely.
very, who's very like versed in life insurance. And that kind of brings me to like how did you get into life insurance? And what like pushed you to actually like get licensed and say, okay, this is what I want to do. This is how I want to teach people how to build it.
Yo, coach, I am a certified romantic and a certified F up.
Yeah.
A certified F up, right? So I love hard. Um, One of the first things that taught me about life insurance is I was 18 and I got money and ran into money, but I also was in a relationship with somebody who had a baby and I fell in love.
Yeah.
And because we love to show out and make sure that hey, I want to spoil the baby, I want to do this, that, and the third. I showed out and I showed out without regard to what else was going to happen in the future, right? Um, and that failed.
Yeah.
That taught me my first lesson about money is that we needed to learn financial literacy, right? But then I found myself just over broke. Right? Found myself just over broke and I was working at Amazon. Now I like I said, certified FO,
Yeah.
right? So I've worked at Amazon quite a few times, but this particular time around I got fired. They fired
Yeah.
me, right? Told me I could come back in 90 days. And I'm like, all right, I'll be back in 90. I'll be back in 90. I'll see you in 90,
Yeah.
right? But for that 90 days, I ended up getting my license and I got my license and I was like, okay, well, what I'm gonna do with this? I started calling people. The first thing you hear as a life insurance agent, because again, nobody wants to be a life insurance agent. This is something that I just happened to get on Indeed and things like that. And
Right.
I saw it after being fired. And like I said, I'm a certified F, so I'm sitting there like, you know what? Here we go again. Got to find something to do for 90 days. And I don't know what I'm going to do because this is a repeating cycle. Life sucked, right? But I found this opportunity and I found it with Symmetry Financial Group. They ended up messaging me back in my upline. His name is Dylan, or I apologize, Brian, and he has a partner. His name is Dylan Crane. He's right now the number one agent in America. In the
Mm.
first 12 months, he made 1.5 million
Wow.
helping people.
Yeah.
Um, and he was on his run. So when I first got in, I was like, oh, I'm hearing stories about him. Oh, he's the first one to do this, that, and the third. Oh, I want to be just like that. I came in and failed. Life insurance isn't for everybody. It's not for everybody, right? But if you're willing to go and test again, if you're willing to put your mind to it and go and try, life insurance is a beautiful thing, right? So like I said, I failed. And I failed hard. And then I started picking up the phones again. Picked up the phones, first thing you hear from your family, this is a scam. You trying to kill
Yeah.
me?
Yep.
You want to kill me? That's what you want to do? We don't talk about grief and what we need to do for the afterlife as if death don't happen to everybody.
Yep.
And I see that seen that a lot in our community. I would pick up the phone with family members. You trying to kill me? I don't want no policy. You trying to kill me? No, I'm not trying to kill you. I'm telling you how to protect your family and how to
Right.
use it right now. And then my god sister, she has sickle cell.
Mm.
She hit me up out the blue on and was like, I see you still saying that you're doing life insurance, and I know it's hard right now. Especially because your big brother not with you right at this moment, pushing you through because he's an entrepreneur. He the first one to do it. Um, and she like, well, I need life insurance. You know, I have sickle cell. I need to make sure something happened. Well, I did not get to her in time. She passed away. We had a conversation for about 12 days. Um, I did not reach out to her mother in time. I did not reach out to her in time. And we did not get a policy. So GoFundMe became a thing.
You know.
August 12th of last year was a day I said, yo, like I can't quit. That's not an option. I started work at Amazon again after the 90 days, but I was only there for a week. I was only there for a week. I had to go and do the life insurance thing because I see how important it is. I went and got me a policy and said, hey, if something happens to me, all of my kids are protected. Blood or not, they're good. Everybody is good. Their mothers are protected if something happens to me, so that way my kids don't have to up and leave their homes. They don't have to change schools. They don't have to, oh, we're struggling for bills. We don't have to create another financial burden when we already struggle to grieve
Yeah,
the life, right? And because we're out in the community, that's another thing. I want my breath to matter. So yes, anybody that's breathing, there's people that get life insurance policies on their pets called pet
yeah,
insurance. So if we can get pet insurance, if we can get car insurance, if we can get credit cards, I guarantee you there's $25 somewhere that we can put a policy, even if it's not on ourselves, even if it's an accidental policy. We want something in place so that we're not begging for everything because we're no longer in a position to have to beg. We can do for ourselves now. And this is the perfect I guess, perfect industry for me to do it. I got told there was $1 trillion industry that I could step into, and here I am.
yeah,
I'm trying to take the bank.
right,
I'm going for the total wealth heist. I'm taking it all.
yeah,
So anybody that want to join me, come join me.
yeah.
It's a total wealth heist. Total wealth heist.
I like that you said that because a lot of people think that life insurance is saturated. Like a lot of people like, oh my God, everybody's a life insurance agent. And look, it's $1 trillion industry. Like there's no shortage of like, money out there. But a few things that you said that like resonated with me is like when you have to go, like when it's time to go, it's time to go. Like God is
Yeah.
gonna tell you like this is like God gives you signs, right? Like when I was first starting out, I was working with Primerica. I don't know if you heard of Primerica. But
Yes,
I
I
was
have.
working with, yeah, I was working with Primerica. So I was there for, I was showing up to calls, but I wasn't going all the way in full throttle. I'm still trying to run my credit repair business. I was diving into the podcast. Like I had just started the podcast.
Mm,
And I didn't know like how to put time away for it. And as you know, like when you first start out, you got to study a lot. You got to read a
mm,
lot. You got a lot of stuff to do. When you're really like just first starting out trying to understand life insurance and the different policies. So
mm-hmm.
that was a big thing for me. Like I could not commit to putting the time to it. So I just like I called my coach one day and I was like, I can't do this no more. And she was like, oh well, I appreciate you. Shout out Layla. But like it was a point to where I had to say, you know what? Like you said, life insurance isn't for everybody. But like I had to say, you know what? It's better for me to go find someone who I can send my people to and I can, we can work together because, we kind of in the same industry as far as,
Exactly.
financial literacy, right? So we want
Exactly.
to teach financial literacy in a way of being that person that's putting people to payment and then people studying you, right? So, when you actually get out there and you put your people to payment, you get some money and you're doing that, it has to, like, you have to have some type of substance. Like, life insurance agents can't just come on there for the money, So if you want to do life insurance, you have to have a story behind it. Like, there has to be a reason that you're doing this. Like, it's bigger than the insurance. Like, seriously, really bigger than the insurance. And that kind of brings me to like when like a regular person is trying to find their life insurance. Let me look at this quote I was looking at. But I don't want to misquote. It said 51% of Americans have zero, as in zilch, life insurance coverage. 51% of Americans. That's like alarming. You know what I mean? And then if you go back to thinking like, our community, like you said, like GoFundMe is a thing. Like GoFundMe is a big thing that a lot of people do. People pass away and we, pouring out liquor for the homies, but nobody's going to bring their mama flowers. Nobody's helping at the funeral. And that's like, it's one of the biggest things that I want to break. Like people think that, you don't need life insurance or you're young. And then, for example, my cousin had passed away. He was in the shooting, probably when I don't know too much about life insurance anymore. I don't know how to change. But he was an innocent bystander in a shooting. And he passed away. And his mom had a GoFundMe to pay for the funeral. Right. And I'm looking around like, damn, this is hard, So we had a big funeral, all his homies came, And I'm looking around like this ain't how this supposed to go. You know, you see a lot of hurt, you see a lot of pain. Like you said, we don't know how to grieve and we don't know how to bounce back afterward, right? So that kind of brings me to like understanding the education part of it. Because our community, we so skeptical. We so skeptical. Like we don't look at we need to see the results first. We don't want to dive into stuff unless we know it's proven. And that's fine, right? But here's the thing that I want to start breaking down is the actual like the life insurance policy. So what I want to ask you is, what is the difference between? Because there's a few different kinds, but I'm gonna give
Mm-hmm.
you three. What is the difference between a universal life insurance policy, one with variables, and then terms? We talked about terms a little bit, but just kind of break down. We can start with term policy. We just break down each and let us know like how can we utilize each policy?
All right. So let's talk about the term policy. And I'm sorry for your loss, right? I do want to let you know it's very common. So the GoFundMe is a thing. Like you said, it's a lot of us are using it as a fail safe instead of taking a bank,
Mhm.
right? And here's what I mean. So, for instance, for your cousin, how old was your cousin?
He was only 22.
22. So, say when your cousin was 18, he got a policy that was a term policy, right? This is a fixed policy. This policy it would have stayed the same pricing for 10, 20, 30 years.
Mhm.
All right. And the only thing that's guaranteed is that death benefit. There is no cash value growing on that policy. Okay. Say he kept that policy and it was a 10-year policy. Well, as long as he died within that 10 years, that policy will say it was 500,000 would pay out the full 500,000. Okay. If he let that policy lapse and stop paying that policy, he would not get any money back from that policy. That policy would then be canceled, right? So he would lose out on his money, and he wouldn't get anything back if he allowed it to cancel, right?
Mhm.
That's just the idea of anything canceling, right? If he didn't have that policy at that point, but say he restarts the policy, it would then still restart the 10 years.
Okay. Okay.
Okay. Say he goes and he doesn't die, but he doesn't reset the policy after 10 years and he goes into that 11th year. That policy doesn't pay out on the 11th year.
Okay.
Okay. If it's not set for that time period, it will not pay out for that time period. Okay.
Gotcha.
When we talk about a IUL, that index universal life policy, that policy is a cash value policy. So what will happen is you'll say, okay, for instance, for me, a lot of policies, there's some policies that start at 35,000. Okay, well, I only need 35,000. Well, that 35,000 in the IUL, there's a portion of it that goes into what's like a savings account, but into a where they're trading, basically.
Yeah.
So you're leveraging your money. You have a credit card?
Yeah.
Same sort of thing. We're leveraging
Right.
the money,
Mm.
right? So we're taking that money and we're taking a piece of it and we're putting it into the market, but we're also adding a safe barrier for you because our promise is, hey, we're gonna make sure that this doesn't eat your account and take away from your death benefit. So at all times, you should either be staying still with the cash value or you should be growing.
Oh, hold on. Let me stop you real quick because you said death benefit. I know what death benefit is, but for the viewers, what's a death benefit?
So a death benefit is what that policy is, what that carrier has promised you to pay out on that policy when you die. That is
Okay.
that death benefit.
Right. Okay. So back to IULs.
Absolutely. So with that cash value, so the IUL has a separate bucket. So it has the death benefit, and then it also has a cash value bucket where a portion of your premium, so what you're paying monthly, is taken in and put into that account, and then is then put placed into the market where it's gaining more cash.
Mhm.
Okay, and that's based on how you set that up. Like I said, policies can vary depending on what you're trying to do. So I can't guarantee you what that may look like unless we're sitting one on one and we're looking at what you're trying to do because it's a tailored plan.
Mm, gotcha.
Okay.
What about variables? Right, I got a lot of questions about variables. I've seen a few people they don't necessarily understand how it works, and they don't understand the different types of it. So what about variables?
So as far as variables, so we have different variables. So if you have like a accidental benefit rider,
Yeah.
this is somebody that you can add to the policy that if something happens, uh, and say you're in a car accident, and this is for my people who say, okay, well, I've gone through all these different carriers, and I personally work with 40 plus carriers, but we've gone through all these carriers and we've been declined. Well, the accidental death benefit is still a policy that you can look at because it doesn't require a uh, a health checkup.
Oh, right. Yeah.
Okay, so that policy is something that you can add on to there, and you could then get an additional payment for that accidental death rider. So that person that you add on that may pass away in a car crash, that person is then added on there, and you can get that payout for that as well, right? Say we have a your spouse, right? And we want to make sure that, hey, if something happens to me, I want to make sure my spouse gets paid out. Or I don't want this policy to pay out until both of us pass.
Right.
So then there's a survival variable there. So it's just different things that we have to look at depending on what your situation is, as well as there are the other variables as far as what market you want to place your funds in. Because how
Mm,
you set up the percentages is dependent on how it pays out as well, right? Because certain markets do better than other markets.
yep. Okay. Okay.
There are plenty of different variables. Again, it's dependent on what you're trying to accomplish.
I like that. I like the way you worded it because it's like a lot like when you like I do the same thing in credit repair, right? Because when
Mhm,
I be doing credit repair, a lot of people are like, "How does this work? What do I do?" And I start, speaking laws and starting to saying all this legal stuff.
mhm.
But when you break it down like that, it makes people say, "Okay, this is something that I can handle." Or if they can't handle it, they know they can go hire someone and someone will give them guidance. But one thing that we all cannot negate is that we do need life insurance, right? Whether
Absolutely.
you're young, whether you're single, whether you're married, whether you're old, whether you have kids, whether you have no kids, right? And one thing that you said is kind of I wanted to touch on real quick too, because you said something about the survival benefit, right?
Mhm.
Is it and this is something else I've seen too. Is it true that women are more likely to need coverage or more coverage than men?
Um, so if you ask my kids' mothers, they're gonna say men are more reckless, and I may just agree. I may just agree. It depends on who you ask. From my perspective, men do more reckless things than women. Women tend to think a little more logically about their lives, where we may jump out in traffic because ooh, we want the thrill. We
Yeah.
might jump out a plane because ooh, we want the thrill, right? But she's like, nah, I'm not doing that because that looks dangerous.
Right.
I'm not bungee jumping because that sounds dangerous, right? Right. So it depends on who you talk to. A lot of people, what I'll say is on my team, a lot of people have said that we see more recklessness from men. Right. They're doing a little more dangerous stunts. We're out here doing the race cars and things like that. So they would kind of agree in that manner. I believe that just because women do things like have babies and help build dreams, you should be getting protected. If
Yeah.
you're taking care of kids, you should be getting protected. If you're teaching, you should be getting protected. If you're retiring, you should be getting protected. We should roll over our money. It doesn't matter who you are, sex, creed, color. You could be any color in the rainbow. You could be whatever sex you want to be. You could be a frog. I feel like at this point, you should be getting protected. And there's literally pet policies to cover pets. So I feel like we should value our lives a little more than we value our goldfish, right? So I feel like this is important. So yes, any and everybody that can get insured one way or another should be getting insured because you have a message, you have a story, and somebody needs to hear it, right? And that's the only way we're able to each one teach one. Um, because nobody's listening when there's too much noise and grief going on.
Yeah.
And when you throw that financial burden on top of that, people's worlds fall apart. And I've seen where because the financial burden happens, our mothers then have to get two jobs. Our fathers may be creatives, but they can't go create, so they're in somebody's warehouses, right? And children are being left at home to fend for themselves, and things are happening that we later on regret. I feel like the first step is that financial literacy and knowing what tools to be able to use, and this is just one of the many tools you can use to kind of break some barriers. And a lot of our barriers start with finance.
Yep. It really does, Tank. Like it really does. Like when it comes to understanding what, like you're talking about, it's a tool, right? And I
Mhm.
always tell people like you're building a financial house, right?
Mhm.
So you're gonna need credit as a tool. You're gonna need life insurance as a tool. You're gonna need investments as a tool. You're gonna need so many different. You need discipline. You need motivation. You need a team, right? So when you're building this house, you have to start at the foundation. Never seen anybody build a house from the roof up. They go from the floor up, the roof down, right? They go
Yep.
from the floor up, right? So when you look at that aspect of things, and this is the same thing with credit, right? And credit has a lot to do with your life insurance too. And you have, let me ask you this, right? Explain to the people how your health or your finances or your credit can affect how much you have to pay in insurance. Because I think that's a big thing. A lot of people don't know about that. A lot of people don't know that you sometimes you do have to get a health checkup before you get insurance. They think you just go in and get it. But tell us a little bit about that. What does that have to do with the premium?
Um, so yes, everybody should have life insurance, but not everybody qualifies.
Yeah,
No, you still have to qualify.
right.
You gotta be about something. And what I mean by that is in order for you to qualify, yes, sometimes we are looking at your health. Yes, there are going to be health questions. Yes, there are going to be financial questions. We want to know how much debt do you have, right? Do you have credit cards? If so, how many credit cards? That's
Right.
part of your debt. When you pass away, your debt don't just disappear. It
Yep.
don't get buried with you,
Mm-hmm.
right? Them credit cards don't get buried with you. That car bill don't get buried with you. That mortgage don't get buried with you. Somebody has to pay for that,
Mm-hmm.
right? And that's big because, like you said, a lot of people don't realize how that affects things. Life insurance can help you become debt free to be able to qualify for credit cards.
Hmm. Break that down a little bit.
Life insurance can help you become debt free so you can be able to qualify for credit cards. There are debt free, there are ways to use policies and navigate policies to use them while you're living to clear your debt.
Mm-hmm.
I work in, I'm a life insurance broker.
Yeah.
I don't do this alone. My team is built of different people. So again, even when we're looking at like, oh, people are having debt and they're still having to collect checks monthly even after retiring, and they're saying, oh, that we're still not making enough money.
well, how can we use life insurance policies to make it so that you're not feeling like your whole retirement is a bust because you ain't had enough money and you gonna outlive your money,
Right.
right? So we show you how to get debt free. Well, you utilize life insurance policies to become debt free, and not only to become debt free, but to become the bank, right? So there are
Mm.
concepts, there are ways to use policies and to set them up to what you need them to be to become debt free. Like I said, I'm not the expert of being completely debt free because I'm still working on getting debt free with myself. Let's be a little transparent here, right?
Yeah.
but but I have a team who works with life insurance as far as just mortgage protection. We do debt free life where you're now using these policies to become debt free. We're doing the in-home banking concepts when you're now becoming the bank, right? So there's a team of people. We don't just do one thing because we are independent. We
Right.
don't just offer one thing and say, okay, there's nothing else to be offered. We want to get you where you want to be, where you want your family to be. So you have a plan in mind for your family, cool, right? And I'm sure if you're watching this, you're definitely a smart person and you definitely have a plan for your people. Because people that don't have plans are not gonna sit here and listen to this,
Yeah.
right? People that don't want to put plans in place. But I'm
Mm.
talking to the movers and the doers. Like right now, a policy it has now been created to do a lot more than just pay for your death.
Yeah.
You can use these in an emergency situation. Like I said, the debt-free life is the best thing going right now. And I know a lot of people are like, yo, I have debt. How do I do that? Come over.
Yeah.
Let me know what you need and I'll get you in touch with my team who knows exactly how to make sure that you get debt free. And some people have gotten debt free as soon as 9 years or
Yeah.
less.
Mm. That's a
Okay.
big thing, man. Like, and here two things, right? Because I think a
Mhm.
lot of people think when you say debt free, like no debt at all, that's a big thing that a lot of people want probably want to learn more about. How do you become debt free? And that's a big thing that you teach. And another thing that I like to teach is what type of debt are you getting into, right? Do you
Yeah,
know how
you
to
want
get
good debt.
into it? Exactly. So if we get in good debt, when we get out of debt, you're positioning yourself to live a certain way. And like I tell people, credit is not a number, it's a lifestyle. Your
Hmm.
life insurance policy is part of your lifestyle, right?
Hmm.
Like you said, people value their pet insurance and that more than they value their life. I know so many people who got car insurance, but they don't have life insurance, right? So you're
Hmm.
valuing your car more than you're valuing your life, right? Because if you get
Right.
in that car insurance, that car's going to be covered. You get in that car wreck, that car's going to be covered. But what about your life, right? So I think a lot of people need to understand when you know how to play the game, you just know how to move, right?
Right.
So that was the first thing. The second thing is you said something that we got to break down, right? You said becoming your own bank, right? We
Hmm.
talked a little. We mentioned it in the beginning about trust. Now,
Hmm.
when we talk about trust, y'all got to understand a few things about trust. There's a few different types of trust. You got a revocable and an irrevocable, so you can either change it or not change it, right? With the irrevocable trust. But when you add life insurance in there along with your assets, or you add life insurance in along with your businesses, right? What can that do? Like, why do we put life insurance in this trust, and how? Like, explain the becoming your own bank aspect in that concept to my listeners.
My favorite word is leverage.
Mine too.
Leverage. Right. The name of the game is leverage. Right. Um, and the reason I say leverage is because I am, let me first say, I am not a tax attorney or a trust attorney. I am just a life insurance learning about trust and building my own. All
Yeah.
right. So I want you to know a trust is a way my people will protect their people.
What?
Okay. And if you're watching this and if you're sitting here with me, you gotta be my people. My people protect their people. And the reason why I say this is because a trust is a system. We have to know systems.
Yep.
And a trust is a system that you personally can create alongside of an attorney. And that trust system could then hold a life insurance policy or many life insurance policies as a person would.
Yep.
But now it owns that policy. It pays for the policy and it's the beneficiary of the policy. And being both the payee and the beneficiary of the policy, when something happens to you, that trust is then paid out. Let's talk about generational wealth. This
Mm-hmm.
is how we pass things on to the next. You don't want your 13-year-old kid to get $500,000. And most of us are quick to say, I want my kids, there's nobody else. I want my grandparents, there's nobody else. I want the boyfriend, the girlfriend, there's nobody else. Right? And sometimes situations don't work out. But what that trust does, that trust takes that policy and says, okay, I'm going to use this policy to fund the business.
Mm-hmm.
Let's how we do it. We're going to go and take this, we're going to buy this policy and leverage our premiums to get the death benefit. And in doing so, when the bank is looking at my trust, they don't see, oh, he's paying $125 for the life insurance policy.
Yep.
They see, oh, he's worth the mill.
Yep. Mm-hmm.
Because those policies are sitting in there. And now I can tell the bank, hey, you see the money I got in there right now. I'm building this business. I need a loan. But I want a loan. I want a loan off my money, my cash value, my cash value, and I want it to still grow as if I never touched it.
Yeah.
And then when you borrow it from your own life insurance policy, now it's still growing as if you never touched it. And then you go back and you pay yourself back.
The bank now.
You're the bank.
Mm-hmm.
Death to the middleman.
Yep.
There's no more middleman. We are in a season where you can get rid of the middleman on all ends.
And that also means you're making more money too. You know what I mean?
Exactly. Your cash is making more cash for you. Why?
Yeah.
Because you just paid yourself back, but your policy states that because you borrowed from it, it's still growing as if you never touched it.
Mm. Mm. Y'all better
And
stop playing.
and then that trust, a lot of us say in parenthood, we're like, hey, there's no book for parenthood. We never been given a guide for parenthood. Nobody ever told us. Well, what if the person that passed away that you needed that message from, you needed to hear tell you, hey, you got this. Keep going. Yo, I know parenthood is hard. I know lifing, adulting is hard, but I guarantee you could do X, Y, and Z. And here's why I know that because I saw this, this, and this. I know I'm not here no more, but I saw this, this, and this. Those type of messages could be left inside of your trust.
Mm.
Your trust can hold that for you. And then when you pass at certain times, say there's a wedding, it could trigger, be it a payment that's paid and a message release that says, hey, baby girl, I wasn't there for you. I'm not there right now for your wedding. Son, I'm not there right now for your wedding. Baby, I'm not there for the grandkids being born. Hey, I'm not there, team, for the community to keep going and seeing what y'all doing. But now the trust holds that and it sends those messages. And now you have a trustee who gives those messages at the dedicated times. And then the money is still flowing. So
Yeah.
now you didn't run through the money, because most people, they get rich and they run through their money. So now you didn't run through the money because there's rules and regulations and bylaws in place that this money can't be touched until certain things happen.
Yep.
When certain things happen, how certain things happen. And if you do this, this, and this, you won't get that.
Mm-hmm.
Right?
Mm.
That is how these tools work together. And then we could talk about credit, right? So now I'm a bank, but I have relationships with banks.
Right.
I can go and talk to the bank and say, hey, I need a credit card, and I need a credit card for the trust. And based off of your relationship and what they see going on with your trust and your net worth, now they're willing to give you more credit.
Hmm.
I be doggone.
Hello.
Hello.
Listen.
Your
Hey,
net worth, your network is your net worth.
yeah. Listen, Hank, the big, like, here's what I want to say, right? And this is a word that you said, one word that I love, and I use it every time I talk about credit, which is leverage. Another
Mm-hmm.
word that we're going to talk about is structure. If you
Mm-hmm.
have that structure, like Hank was saying, it is going to put you in position to have your kids set up, your kids set up, the grand, everybody is going to be set up, right? Your community is going to be set up. So when
Mm-hmm.
you build, and when we talk about that system, it's all a tree, right? You've seen a family tree. There's a tree to wealth, right? And I
Mm-hmm.
might name this episode Rich Secrets, Wealth Secrets, because we gave y'all some game. We Tank gave y'all a lot of game when it came to life insurance. But when we started talking about trust and kind of wrapped it up into that system, y'all just got some real game that's gonna put y'all in position and let y'all know where y'all need to go. So
Mm-hmm.
here's what I will say about trust, right? When we talk about credit, when we talk about life insurance, and we talk about trust, and we talk about debt, right? It's all a system, okay? It's a system that works together. And like I said, we're building a financial house, and we need different tools to do different things. So each room is specified to do certain things. So if I got a room here for life insurance, that's going to cover my life and my debt and my kids. Then I got my credit. That's going to help me build assets, right? Then I got my assets that get bring in money and pay for all of my debt, right? And I could go get debt on top of debt and have the debt pay for the debt. That's another episode. But we don't do, but there's so many different ways that you can build wealth through the tools that we are bringing on, especially on this podcast, right? We talked about, like last time we shout out Earl, we talked a little bit about taxes too. But when it comes down to understanding the tools that are in front of you, you got to know how to use them, right? If you know how to use a hammer, you know how to put a nail you know how to put a nail into a desk, right? You know how to use a drill, you know how to drill something into a wall, and you can create something with that, right? But the tool is the small thing, right? If you look at how small a screwdriver is, it's extremely small, right? But it does so much work, right? Like some stuff, like if you had a table and you didn't have a drill or a screwdriver, you could not put that thing together, right? So when you look at how important your life insurance is and your credit is, these are all tools that will get you from financially unstable and financially chained to financially free and buying back that time freedom, opening that business, building it up, starting, whatever you want to do, right? And that's what it really comes down to, right? It comes down to protecting, it comes down to building, and it comes down to creating, right? So when we create something, you want to build it, then you want to protect it. So I think that, everything we talked about today was big, but when we close this up with the trust, I love everything that you said because it really brought a lot of clarity to a lot of people, right? Because a lot of people don't know how that will work, right? They think of life insurance and they don't even think like trust is like the last thing that they're thinking about when it comes to life, right? So I got so many other questions because there's nobody unless you've been in that life insurance, section or you have life insurance, you really don't know. And like I said earlier, 51% of Americans don't have life insurance. So there's 1 out of 2 people that don't know about life insurance and don't know how to leverage. So that's why we did this episode today, y'all. So before we wrap this up to here, I want to ask you one more question. We do this with every single person on the podcast, right? So I want to ask you, what are your plans for 2026, right? And I want you to give us 3 things that let's just say beginner, right? Let's go with beginner. 3 things that everyone who's trying to look for life insurance or trying to figure it out, what do they need to do to get them the right insurance policy? So give us 3 things. What you need.
There I go talking on mute, eh? All right. So I'm gonna give you the 3 things that I think everybody should consider as they are on their search or on their journey to look into life insurance. Um, One of the things, the biggest thing I want you to consider is why.
Mm.
Why? What are you getting? What are you getting it for? Right? Are you getting it just because there's a trend? or are you getting it to actually utilize it for its purpose? Because everybody's talking about IULs right now. Everybody's talking about annuities right now. What are you getting it for? Because if you don't know what you're getting it for, is there truly a purpose in getting it? I can't work with you if you don't know what you're getting it for. Period. Okay. Um, who are you getting it for?
Mm. Yeah.
So, because are we getting it just because, oh, I'm in a relationship and I'm having a good time and I just want to get it right now, or and there's no true purpose for it. All right, I just want to get it right now. Yes, life insurance is for everybody, but life insurance isn't a set it and forget it situation.
Mm.
This is how our community was played and ripped over when life insurance policies first came out, because we weren't aware that you don't just set a term policy and forget it. You must renew it when that time period happens, right? Um, if you're looking for a set it and forget it situation, there's a policy for you, but we need to know it. We need to know what you need it for, because if it's a set it and forget it policy, there's annuities. There are IUL policies. There are whole life policies that will allow you to just set it and forget and grow money without thinking about it. Right. But if you're trying to get a term policy, or if you only qualify for a term policy, it's not a set it and forget it situation. Okay. I feel like those are the things that are important. So again, it would be why you're getting it, who you're getting it for, and then I would say, did you consider everything? And what I mean by consider everything, because I can't just choose three things. When I say consider everything, I mean consider, when you're speaking to an agent, are you speaking to a independent agent who is not captive to one insurance policy, one insurance provider,
Right.
who can offer more options for you and actually customize to your needs? Or if that season doesn't require customization, then maybe that person, that captive agent, is good for you. All right. Um, are you are you financially ready to purchase that policy right now so that your family is protected? 'Cause we have to think about that. Some people don't include everything in their budget, and when it's said and done, oh, I'm not ready to purchase it right now today. So
Mhm.
how important is it to you truly? And that's the reason why we start with your why. Because if you can determine your why, then of course you'll be able to tell me who you're doing it for. You'll be able to tell me if you have a budget for it. You'll see the importance of it, because again, it's for your life. It's for those that you love. And again, it's a final love note. It's a final love note. When all is said and done, death to some people feels like the most hurtful thing anybody can ever do. That final love note that says, "Hey, I know you are grieving me, but you will not have to be financially responsible for my death. You will be able to move in peace as if I was here." That is what that life insurance and that trust do together, and that's even what they do apart. But together is even better message.
Yeah. Mm.
So, um,
Hey.
as far as what I'll be doing, so what I plan on doing for this next, I want to say I gotta say a year. So in 2027, we'll check in again, and maybe we'll check in a couple times, right?
Yeah.
But when we check in again, I'm hiring right now. I'm not hiring everybody. Like I said, I'm hiring the movers and the doers, the people that want to put their feet to the ground and do the work, right? So I am looking to hire at least 36 people. And not only that, but I'm looking to help at least 140 families. At least 140 families. I want to be able to teach more people and protect more families, get more people insured, so we don't have to see as many GoFundMe's, because GoFundMe is not the option.
Nope.
It's not the option, right? It's not what we do. That's not what we're relying on anymore. We are moving to bigger and better, and we have to focus on systems, and these are the systems. These are the tools that we need to be using to make sure we get there. So that's my goal. Like I said, my goal is to hire 36 people, help 140 people, and I'm on a money. I'm on a total wealth heist. So we're going for the holistic heist. We want mental, spiritual, physical, and financial to be well rounded. So that is what we are on right now. And teaching these kids, because I'm homeschooling. I'm doing the best that I can with homeschooling, and trying to take over the world with that.
Yeah. Mm. That's huge, and it's all about impact. And like Tank said, when you talk about building something and helping people, it all comes down to what have you done? Have you done something that's really gonna, push people to, come around? And if you have been watching this podcast, and if you watch the podcast regularly, you know we don't bring people on unless they're out there doing their work. So, Tank, I appreciate you for coming on. This was really a great episode. I learned some things, and like I told you, I know a little bit about life insurance, but I learned some things hearing you talk, and you break everything down to where the regular person or, our people can hear what you're saying, and it resonates with them, right? It resonated with me. So hiring 36 people, helping 140 families. It is July 1st, y'all, 3 days before the 4th. I'm gonna check back in with Tank in a couple of months, in a couple of years, not a couple of years. We're gonna check back in.
I got you. We'll check back in. We'll be back.
we gonna tap in with Tank, and we're gonna see where he's at in a couple months. If you guys like this episode and you want to have Tank on, and you got some questions for him, you want everything and all this stuff is going to be below. You want to schedule a call with him if you want to, even follow him. All that stuff is going to be below in the description. But if you guys want to see him on for another episode, just put Tank in the comments and we got you. All right.
Absolutely.
So this was a wealthy and healthy podcast that y'all hosted the most. KDK Capri, and I had Tank on today. We talked about life insurance and so much more. Y'all give it a round of applause, and I appreciate you, Tank, for coming on. And till next time, bro.
Thank you for tapping me in, Coach.
Of course.
Check it out, check it, check it out, check it, check it, check it out, check it.
Hey, Greg and the CE, call me hip hop junkie. Straight to your dome piece like grass monkey. All I wanna know, do you wanna get funky? CNC beats be kick.
Check it out, check it, check it out, check it, check it, check it out, check it.
Hey, Greg and the CE, call me hip hop junkie. Straight to your dome piece like grass monkey. All I wanna know, do you wanna get funky? CNC beats be kick.
Check it out, check it, check it out, check it, check it, check it out.